August 19th, 2026. 5 FinTech Frontiers Reshaping Digital Commerce. Disclaimer: nothing here is legal, medical, financial, or official advice. News is news, not advice. Do not treat anecdotal stories as advice. Forward dated for publication on August 19th, 2026. Reporting reflects information available August 18th, 2026. Google Trends did not provide a verifiable ranked top 5 list, so story selection also considers current search result prominence, recency, and e-commerce relevance. 1. Corporate treasury and cash flow. Real-time liquidity becomes the new checkout advantage. Treasury is becoming e-commerce mission control, the cash revolution hiding behind every sale. The most important e-commerce transformation may be occurring after customers click buy, as Treasury teams connect marketplace receipts, virtual cards, bank APIs, and cash forecasts into systems capable of showing liquidity almost continuously rather than through yesterday's spreadsheets. The papers reports that American Express expanded virtual card capabilities for United States commercial customers through its at-work platform and its relationship with Confirma, while Melio introduced expense management functionality for smaller businesses, developments that place payments, spending, and working capital within increasingly unified financial workflows. For online merchants, that convergence matters because inventory purchases, advertising expenses, marketplace payout schedules, refunds, and supplier deposits can create a widening gap between apparent sales growth and cash that is actually available to operate the business. The hopeful technological answer is a Treasury control tower where artificial intelligence forecasts near-term obligations, software automatically reconciles receipts, and virtual cards provide transaction-level controls, allowing finance staff to spend more time supporting workers, suppliers, and sustainable expansion instead of hunting through fragmented ledgers. Legal subtopic: control over automated treasury. Automation does not remove responsibility, so companies should independently evaluate authorization limits, audit records, data processing terms, sanction screening, safeguarding arrangements, and the contractual treatment of erroneous or duplicated payments before allowing software to initiate transactions. If tomorrow's orbital settlements require autonomous supply chains and programmable money, the disciplined cash governance practices being built for terrestrial e-commerce today may become their earliest financial navigation systems. The papers. +1. 2. Enterprise risk management. Fraud moves beyond the checkout. Your fraud dashboard may be watching the wrong door. The attack has already moved. Enterprise risk management is being forced to follow the entire customer journey because fraud is spreading from the payment screen into account access, promotions, returns, fulfillment, and buy online pickup in-store operations. The 2026 Global E-commerce Payments and Fraud Report, produced by the Merchant Risk Council, Visa Acceptance Solutions, and Verify, draws on a survey of more than 1,200 merchants in over 35 countries and examines payment acceptance, fraud controls, and post-purchase abuse. Separately, reporting on Signified's 2026 State of Fraud report says fraud pressure rose 33% year-over-year during the first 4 months of 2026, with account takeover attacks increasing 78%. Card testing increasing 175% and BOPI's fraud increasing 65%, although those figures reflect Signified's own commerce network and should not automatically be generalized to every retailer. A modern ERM response therefore connects identity signals, payment behavior, device activity, delivery changes, refund patterns, and customer service interventions. But it must preserve humane review pathways so honest shoppers are not trapped by opaque automated decisions. Legal subtopic: accountable fraud intelligence. Merchants deploying these systems must examine privacy notices, retention limits, cybersecurity obligations, vendor oversight, consumer dispute rights, anti-discrimination exposure, and the evidentiary quality of automated alerts, particularly when a risk score delays fulfillment or restricts an account. The long-term opportunity is a trust architecture that functions like the protective shield of a future spaceport, sophisticated enough to recognize coordinated attacks, but carefully governed so legitimate travelers and small merchants can keep moving. CyberSource. Net. 3. B2B payments infrastructure. Global payouts race toward real-time. The 5-day payment is facing extinction. A new global commerce rail just switched on. The clearest infrastructure story of August 18th is the partnership between Thunes and Fiserv, which the paper says is intended to support real-time international payouts for platforms and marketplaces within Fiserv's merchant ecosystem. The significance for e-commerce lies beyond raw speed. Marketplaces must pay sellers, contractors, and service providers across currencies and jurisdictions while preserving status information, reconciliation data, and enough certainty for recipients to plan payroll, inventory, and household commitments. Search metadata also highlighted Todd's working with Adyen to consolidate payment processing across stores and online channels, illustrating how merchants increasingly want one operational view of physical and digital commerce rather than separate payment islands. Infrastructure providers are consequently competing on connectivity, availability, routing intelligence, and embedded reconciliation, while virtual cards, account-to-account transfers, and emerging digital currency rails expand the range of instruments that an orchestration layer may eventually select. Legal subtopic: cross-border rail governance. Businesses still need to establish which regulated entity holds funds, when settlement becomes final, how foreign exchange pricing is disclosed, which party performs sanctions and business identity checks, where transaction data travels, and who bears responsibility when a payment is rejected, delayed, or misdirected. The people-centered promise is substantial. A smaller supplier should not need the Treasury Department of a planetary megacorporation to receive a predictable international payment. And these new rails could make global digital trade more accessible long before commerce reaches lunar ports. The Papers. +1. The Papers. 4. RegTech. Identity verification becomes growth infrastructure. Compliance just graduated from the back office. AI identity is now deciding who can scale. RegTech received an unusually visible signal on August 18th when Verif announced that it had been included in the RegTech category of the CNBC and Statista World's Top FinTech Companies 2026 list, whose latest edition recognizes 500 companies across 8 financial technology segments. According to the announcement, RegTech is a standalone category for the first time, reflecting the prominence of reporting, identity verification, anti-money laundering monitoring, and compliance technology within the broader FinTech market. Although the release is company-supplied publicity rather than independent investigative reporting. For e-commerce platforms, scalable identity infrastructure can support merchant onboarding, business verification, account recovery, and continuing fraud monitoring, turning compliance from a terminal checkpoint into a trust layer that accompanies a seller throughout the commercial relationship. Yet the optimistic future is not a world in which every customer faces more surveillance. It is a world in which accurate, explainable systems reduce repetitive paperwork for legitimate people while concentrating careful human review on genuinely ambiguous cases. Legal subtopic: Identity technology safeguards. Operators should scrutinize consent and lawful processing grounds, biometric rules, data minimization, accessibility, retention, vendor transfers, appeal mechanisms, and the testing used to detect uneven error rates before relying on automated identity outcomes. The same principle will matter at humanity's next frontier, because an interplanetary marketplace cannot be trustworthy merely because its algorithms are fast. It must also provide dignity, due process, and understandable reasons when a digital gate refuses entry. Yahoo! 5. Institutional trading and market infrastructure. Resilience overtakes raw speed. Wall Street's next crisis may be a data traffic jam. The new race is to stay fast under stress. Institutional market infrastructure is entering a phase in which the decisive question is no longer whether a trading system is quick during ordinary conditions, but whether market data, risk controls, and order routing remain dependable when activity suddenly spikes. Exege's 2026 State of Trading Infrastructure, based on survey and interview information from leaders at 61 global trading firms, says nearly three-quarters of respondents reported some form of disruption during high volatility, ranging from latency spikes to dropped data or outages. The report identifies peak load, expanding trading hours, cross-asset activity, and increasingly burst-like data volumes as stresses requiring firms to plan for extreme conditions rather than average throughput. This matters to e-commerce because the same capital markets infrastructure helps price currencies, fund payment companies, manage merchant exposure, and support the liquid instruments used by corporate treasurers. Meaning failures far upstream can eventually affect financing costs and settlement confidence downstream. Legal subtopic: Resilient electronic markets. Trading firms and infrastructure providers must align capacity planning with market access controls, record-keeping, incident management, supervisory responsibilities, and rules intended to prevent disruptive or manipulative activity, while clearly documenting when automation may be halted or overridden. Like life support engineering for a settlement on Mars, trustworthy market plumbing will be judged not by how elegantly it runs on a quiet day, but by whether it protects human participants and preserves orderly operation when pressure reaches an unexpected maximum. Exegy. Video description. 5 developments are moving financial technology from back-office plumbing to strategic e-commerce infrastructure. This August 19, 2026 report examines real-time Treasury, journey-wide fraud risk, international B2B payouts, AI-assisted identity compliance, and resilient institutional trading systems. Each story includes a concise legal governance lens, realistic market implications, and a hopeful look at the financial rails humanity may one day carry beyond Earth. Video tags. FinTech News, E-commerce News, August 19,